Good morning, ladies and gentlemen. Welcome to the NEWMARK Security PLC annual results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so. Before we begin, as usual, we would just like to submit the following poll, and if you'd give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from NEWMARK Security. Marie-Claire, Paul, good morning.
Good morning. Thank you very much for your introduction. Good morning. I'm Marie-Claire Dweck, CEO of NEWMARK Security. And today we're going to look to share our results and a few highlights of 2024 with an inside look at key developments that are powering our growth strategy to go from strength to strength. First, for those of you who don't know us, let me explain in the simplest way possible what we do. We protect people in safe spaces. How we do this is by providing secure cloud control of people's access, timekeeping, and identity data at work. This means safe spaces, seamless operations, and secure data. Everything we do is about protecting human capital, people in safe spaces. For over 30 years, NEWMARK Security has been delivering long-term value through products and services in enterprise security. We focus on three segments of the market: human capital management, otherwise known as HCM, access control, and physical security. And we employ a great team of experienced specialists who really understand the needs of our customers and their industries. All of our products and services are delivered through two market-facing brands, Grosvenor Technology and Safetel. Grosvenor Technology, alternatively known as GT, is our people and data business. And it's a well-established provider of time clocks, access control, and all of the software and services that run these devices. This business has been growing rapidly in HCM, particularly in the US and Europe. Safetel is also a well-established and is a physical security business where we deliver long-term, full life cycle value for our customers by manufacturing and servicing products like auto doors, retail protection screens, and building security. All of our products and services are delivered at high margin and increasingly generating recurring revenues through long-term enterprise subscriptions and service contracts. But first, let me hand you over to Paul, our CFO, to run through some of the key financials for 2024.
Thanks, Marie-Claire. As usual, all of our results announcements are published on our website at newmarksecurity.com. So let me now take you through a brief summary of our 2024 performance. Group revenue has grown once again, increasing by 10% year on year to £22.3 million, with key partnership successes across the business and strong performances in both the people and data management and physical security divisions. It's been another solid year at Grosvenor, with top-line revenue growth of 6% to £16.5 million, driven by strong performance of the HCM business. We've expanded our relationships with software partners, where we significantly increased share of wallet, growing in both the US and European markets. This is now the 9th consecutive year that HCM has delivered positive revenue growth. Headline revenues at Safetel also grew by an impressive 23% to £5.8 million, building quickly on the modest but important turnaround achieved in FY23, balancing strong new business growth with the continued decline in demand for legacy rising screens in the banking sector. Overall, 2024 has been a very productive year, delivering with disciplined execution against a proven growth strategy. And benefiting from operational initiatives taken in 2024 that are showing this performance is sustainable. So gross profit in FY24 increased by 13% to 8.6 million, driven by increased revenues and a 0.9 percentage point improvement in gross margin to 38.5%. This improvement was due to a combination of customer price rises, a reduction in component costs, and an increase in high-margin recurring revenues. Recurring revenues has been the key metric we've been transforming in our growth strategy, and it's great to see that we've continued momentum this year with a 28% annual recurring revenue growth. And I'll talk more about this on the next slide. EBITDA increased by 50% to 2.2 million in 2024, and operating profit was 0.8 million, up from 0.5 million in 2023. This was due to the strong performance of both Grosvenor and Safetime. Whilst underlying profitability improved during the year, profit after tax decreased by 0.3 million to 0.1 million in 2024. This was due to a 0.3 million pound tax charge as a result of a change in assumptions for R&D tax claims. These tax movements had a knock-on effect on earnings per share, which decreased to 1.4 pence in FY24. We maintained our forward investment focus, sustaining a 0.4 million pound investment in R&D and benefiting from slightly less capital being required as a consequence of the significant investments we've made in 2023 and prior years. The group's cash at 30th of April 2024 was 1.1 million pounds, up from 0.6 million in 2023. This increase was due to a significant improvement in operating cash flows driven by higher revenues, increased gross margin percentage, and a reduction in inventories. Bank borrowings less cash at bank decreased from 3.3 million at last year end to 2.0 million at this year end.
As I mentioned earlier, Grosvenor Technology is a specialist people and data business that responds directly to the challenge of keeping people and their data safe when they enter the workplace. And this creates long-term customer value by providing them with high-spec hardware devices, which are built to last, and equally high-spec control software, enabling cloud-based data and device management services, which allows us to deliver a complete solution. Essentially, this is all about giving customers better control, time clock control, access control, identity data control, and this creates a compelling platform for enterprise subscriptions.
Thanks, Marie-Claire. Once again, FY24 has been another solid year of progress with top-line revenue growth of 6% to £16.5 million, with improved gross profit contribution up 0.5 million to 6.5 million at a 39% margin. Performance was driven by strong growth of the HCM business, with expanding relationships with software partners in the US and Europe. US-based HCM sales grew by 7% to £9.4 million, matched by equivalent progress with key European HCM partners. So rest of world markets delivered similar growth of 8% to £4 million. This resulted in a 7% year-on-year improvement in HCM revenues overall. HCM annual recurring subscriptions grew by 28% year-on-year with an exit ARR of £2.9 million, reaching over 30,000 subscriptions by year end. This is for our software as a service and clock as a service products. Access control delivered flat revenue performance of £3 million, but with strong growth in the sales of Janus C4 increasing by 20% to 2.1 million, adding a 0.4 million of revenues, whilst managing a migration from our legacy Janus and Sati and Advanced products, which reduced by a combined £0.4 million. Whilst the outturn fell slightly below expectations, it neutralised the migration-related decrease of 3% experienced in 2023.
NEWMARK also has a well-established physical security business, Safetel, where we drive long-term value for customers, contracting directly with end clients and also with major contractor partners. We are the UK's leading provider of high-specification physical security solutions focused on 3 key areas: auto doors and entrances, screens and counters, and building security and asset protection. Constantly innovating, our broad portfolio helps us to create the safest and the best protected physical environments for workers, enabling us to provide end-to-end solutions for physical security. While screens are still an important part of our business, today we are serving a much broader range of customer requirements across public sector, private sector, and retail, with a particular focus on auto door servicing, where we're winning major long-term servicing contracts.
So FY24 has been an important year of strategic execution that delivered substantial growth following the turnaround in FY23. FY24 revenues increased by 23% year on year to £5.8 million, a significant step up from the previous year's modest but transformative increase of 3%. This demonstrated the positive effect of our strategy, deploying an enhanced range of products, with product revenues up 30% to £3.7 million. The headline growth of service revenues, up 11% to £2.1 million, was a net result of balancing stronger growth in target sectors whilst managing anticipated ongoing decline in the banking market, with continued reduction in demand for legacy rising screen services. 2024 saw a substantial 51% growth in door services and an even greater 74% increase in entrance control orders. Overall, new sales orders grew by 5% year on year, and the order pipeline expanded by 23%, reaching £11.7 million, or 2 times revenue across all target sectors. Accelerated growth was only slightly muted by the long-expected loss of a large high street bank rising screen contract as it rationalised its estate. Despite this, overall, gross profit grew by 26%, or £0.4 million, to £2.1 million. This was due to the revenue increase and a 0.9 percentage point gross margin improvement to 35.3%. This was an impressive gain in profitability on the prior year.
Thank you, Paul. Now let me give you some operational highlights. These provide evidence of the continuously improving business, executing growth strategies that the market is clearly responding to. So much so that we've extended these strategies and strengthened our ambitions by approving a new 5-year strategic plan that is based on an execution of a proven approach in each division. Here's the summary with some of the highlights. As you know, Grosvenor's consistent strategy focuses on driving recurring revenues by attaching services to all partnerships, existing and new, and leveraging this advantage to win greater share of wallet. Grosvenor's growth strategies comprise of 5 strategic pillars. Pillar 1, we will continue to onboard traditional HCM partners. In FY24, this included the onboarding of 3 new large US-based partners in the latter part of the year, with a strong pipeline of new partners and prospects for 2025. Pillar 2, to attach services to all new business, substantially strengthening our competitive positioning by embedding our market-leading solutions, combining hardware controlled by GT Connect software and incorporating GT services. This provides a compelling all-round proposition that adds significant value to our subscriptions, one that's really hard for competitors to match. Pillar 3, to push services to existing partners as a priority. In FY24, we prioritized converting 8 existing HCM customers who had previously only purchased hardware, upgrading them to recurring service-based contracts, with relationships expanding to attach full GT services wrapper to every sale in the future. Pillar 4, to displace competitors by offering sliding scale pricing, driving maximum competitive advantage at both ends of the market and full share of wallet. This includes the entry-level GT4 lifetime clock, designed to displace low-cost manufacturers with a higher quality product attached with premium services, again, making it very hard for our competitors to match. Pillar 5, to diversify our model by seeking end-user businesses via major OEM partnerships with the likes of Oracle, Workday, and SAP. Having thoroughly researched this opportunity, in 2024, we created a new offering, GT Time, shaped to target the lucrative HCM direct-to-enterprise DTE market. GT Time is a marketplace ready with per employer per month pricing and combines the choice of our entry or premium products with our market-leading data and device management services. As a substantial milestone, at the end of 24, we secured a partnership program agreement with the first of these brand leaders, Oracle, where we'll begin marketing through this channel in 2025. All of these pillars support our strategy to deliver hardware-enabled software and services with long-term recurring revenues. For those of you who heard me talk about this last year, the launch of our strategic cloud platform, GT Connect, has indeed delivered nothing short of a huge shift in our market opportunity. As it intended, in 2024, GT Connect became the central cloud-based solution hub for all our HCM products, connecting over 24,000 devices and already serving 9 million monthly clock-ins. Through this continuous development, it has become a powerful platform, reducing time to market for new products and accelerating the onboarding of our new customers. Our use of open architecture enables us quickly to connect customers, as well as seamlessly embedding all the features into our customers' solutions. This simplicity enables us faster conversions of opportunities by being able to immediately showcase our technology working within our customer systems at the outset. Its important competitive advantage will continue to leverage. It's also worth noting that we are now using GT Connect to act as advanced service platform for all our customers, placing it at the center of the key HCM operations to provide secure cloud control over devices, services, and biometric identity data. With thousands of biometric templates already stored and safely delivered via our connected services. An exciting opportunity exists in the combination of biometric identity data, template, and compliance. GT Connect enables the delivery of biometric compliance as a key benefit of our services, helping us improve security measures, removing fraud from company payrolls, and protect from the threat of non-compliance. We will explore this further in 2025. We are also at the early stages of generative AI adoption, leveraging Microsoft and GitHub copilots to raise our productivity of our team in software engineering, report writing, technical documentation, and bid writing. These efforts are designed to support our future scaling without requiring additional resources, further improving cost efficiencies. This is an ongoing area of focus in 2025. As you remember, in 2023, we introduced GT Lite, a software-limited GT4 edition. As we hoped, in 2024, this enabled significant gains in share of wallet with partners by providing an affordable and superior alternative that comes packaged with advanced services to challenge and displace low-cost manufacturers. With the introduction of GT4 Lite Terminal, we now directly address the full market from end to end, which includes targeting the lower end of the market previously dominated by a Chinese low-cost manufacturer. Rather than compete on cost, our goal has to be to offer an affordable and a flexible alternative that comes packaged with advanced services and the option of a rolling device replacement service that can be used to modernize device estates over the longer term. This entirely changes the way customers think about upgrading their HCM services without being restricted to the limitations of their existing investment in hardware. Just as we hoped, this has already enabled us to displace incumbents and become the preferred supplier to key partners across all their requirements. As I said when I announced this last year, by offering customers this freedom, we've now begun to address a large segment of the market that was formerly stagnant and bring forward the time when alternatives can be sought, opening a large dormant opportunity. Clearly, this continues to be an important part of our growth forward strategy. Grosvenor continues to be driven through partnerships and a broad array of HCM partners. The substantial progress made in expanding share of wallet across our existing partnerships has produced another year of impressive gains, with some notable partner successes. A combination of net growth of 35% across top 15 partnerships. In North America, we achieved major gains with two of our largest US partners, growing 52% and 43% retrospectively. In both cases, we supply a complete range of GT devices from entry level to premium, with sliding scale pricing and services attached to all the clocks, replacing a major manufacturer offering low-end devices without services. This important win translates into longer-term recurring revenues from services with superior customer relationships. Our major European partner also grew by 21% overall. As we anticipated, this partner appears to be pursuing highly aggressive territorial expansion across Europe, which we continue to support as they bring on new national partnerships in Spain, Germany, and beyond. End-user partnerships also delivered positive growth and customer value in 2024. We successfully completed the first phase of hardware replacement projects for one of the big 3 UK supermarkets, providing their stores with seamless and efficient solutions fit for their longer-term needs. We're also planning a hardware replacement project for a top UK retailer, attaching GT Connect to provide the same level of excellence, efficiency, and control. Our focus on delivering the best possible customer experience, combined with innovative technology and integrated services, makes us the ideal partner for these large-scale, large hardware replacement initiatives. In 2025, we will begin the testing of the DT opportunity I discussed earlier. In addition to time clock and software, Grosvenor also designs and makes class-leading access control hardware that's easy to scale and extend, so it can deliver much more than just access control. Throughout 2024, the rapid transition to our newest products continued, delivering growth and demand for Janus C4 products and future products. The timeless value of a good account management, combined with excellent support to keep custom projects, provided to be valuable in a year where spend with public sector partners continued. Private sector business toughened considerably as some of the construction customers responded to uncertain global conditions with project delays and spending freezes. In a crowded, competitive market occupied by global brands, our attention was naturally to focus where our track record was already strong, commissioning major projects with significant blue light customers. This more than made up for the reduction in support for legacy installations. Meanwhile, upgrading large Saturn installations to Janus C4 has provided us with an endless stream of ready-made opportunities with a further pipeline of 2.5 million targeted for conversion in 2025 and beyond. We also continue to work hard on the development of Janus C4 Ultra, an advanced hybrid cloud product with substantial potential, where we jointly developed with our partner, Gamanet. Whilst delays at Gamanet impacted progress in 2024, they have now recovered, and an ambition to launch the new product in 2025 remains. Now let's move on and look at some of the highlights in Safetel. Safetel remains focused on creating safe spaces for employees and colleagues where overall demand is strong and growing. Progress has been substantial as it continues to raise its growth trajectory and demonstrate its market advantage as a leading provider and installer of integrated door solutions and physical security. As you've already heard, in 2024, disciplined execution focused on the areas of high demand, and this returned impressive revenue growth by 23%. This demonstrates the positive effect of our strategy and our focus. By deploying an enhanced range of products and services, we were able to balance stronger growth in target sectors whilst managing the anticipated growth on ongoing decline in the banking market. The focus on the four growth pillar strategy helped Safetel grow market share in entrance control, gain traction with differentiated products in physical security, and increase products for regional and national door servicing demand. In particular, business made substantial progress in door services, which grew by 51%, with an even greater increase in entrance control orders, which grew by 74%. Our range of products also helped us win and compete significant projects in blue light, healthcare, and national infrastructure markets, building high-profile customer references that will bring opportunities to grow further in 2025. As Safetel continues to great performance in retail, rolling out security screens for UK's largest supermarkets, as well as working with other major supermarket chains. Against a background of considerable macroeconomic uncertainty across the UK, the planned mitigation measures taken in 2023 have produced a welcome impact for Safetel in 2024. In particular, sourcing alternative manufacturers has delivered a clear advantage with improved product quality, more competitive cost, and reduced lead times. These advantages showed through in the delivery of key contracts with major national brands and paved the way for significant expansion potential in 2025. And with 5.5 million opportunities added in the year, sales pipeline expanded by 23% to reach 11.7 million, giving us 2 times revenue coverage. I'm sure you'll agree this is a healthy way to exit 2024. Based on this positive forward outlook, naturally our focus will intensify on conversion whilst continue to pursue this proven growth strategy. As we look ahead, Safetel will continue to deliver complete physical security solutions and focus all its efforts on gaining market share in door services nationally and regionally, winning new projects and differentiated physical security products, and converting a substantial opportunity in entrance control through great partnerships and references. This includes fast rising screens with banks and screens and counters at retailers, each providing high-profile references as a trusted and established supplier, a factor that continues to be important in business development. All of the key business highlights I've shared today clearly show our forward strategy is working and sustainable. Growing revenues and profits resulting from disciplined execution of a proven growth strategy. We've now extended and upgraded this by approving a new 5-year strategic plan. Human capital management added an important partnerships, matching last year's growth and increasing annual recurring revenues by 28%. GT Connect enabled services to be attached to all devices, enabling an impressive share of wallet expansion with ease and speed adoption across all HCM partnerships. Access Control successfully balanced transition to new products with 20% growth of Janus C4. Safetel accelerated its upward trajectory with an impressive 23%, building momentum with enhanced range of new products and capacity to an even larger pipeline for 2025. NEWMARK will continue to focus on accelerating growth by increasing recurring revenues, leveraging AI, and enhancing its market share to trusted partners of enterprise-ready security solutions. Thank you, and we look forward to any questions you may have.
Perfect. That's great. Marie-Claire, Paul, thank you very much indeed for your presentation this morning. What I'll do is I'll just bring back up your cameras there. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions that were submitted already, I would just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can all be accessed via your investor dashboard. Marie-Claire, Paul, as you can see, we have received a number of questions already throughout your presentation this morning. And thank you to all of those on the call for taking the time to submit their questions. But guys, at this point, if I may just hand back to you just to read out those questions and give your responses where it's appropriate to do so. And then I'll pick up from you at the end. Thank you.
Thank you very much. I will start with Rob's question. Rob, your strategy emphasizing converting hardware sales to hardware-enabled software and services model. How do you plan to accelerate this transition, and what proportion of total revenue do you expect to be recurring to represent the next few years? So I will take the first part of the question, then I'll hand over to Paul for the second part. How do you plan to accelerate this transition, and what proportion of the total revenues? Well, through attaching services, through greater share of wallet with our current customers and onboarding new partners. And we have a very strong pipeline, as I mentioned earlier. And we're looking to attach services to all the hardware that we sell now. And Paul, I'll hand over to what proportion of total revenue.
Great. Yes. So obviously, the key focus is growing the recurring revenues, and we aim for the HCM element of the people and data management division. We aim for recurring revenues to be up to a third of the overall HCM revenues in 5 years' time. So obviously, we're going to be growing slowly year on year. A big driver of growth for that will be our new D2E offering as well for that. So yes, it's going to be a big growth metric for us.
John, Safetel has shown impressive growth in new markets like auto door servicing and entrance control. And how do you balance further expansion into new sectors while maintaining focus on your core offerings? John, we're doing that, sort of expanding the team as we grow at Safetel, onboarding someone new in operations and an additional salespeople to focus on different key areas without losing the focus on previous areas of focus. Thank you very much, Nigel. H1 is is now more than 4 months complete. Can you provide any estimates for H1? And if you're unable to provide estimates, can you give a reason not? We've had a very successful H1 in both sides of the division, and I'm not able to provide estimates at this point, but I can say we have our strategic plan, we have our forecast internally, and we've achieved what we anticipated. Nigel, why does it take over 4 months to provide the full year results when even bigger companies do this in a shorter time? Nigel, I think every year we have sort of reduced the time to announce our results. We've done it 2 weeks earlier than the previous year. We do have summer in the middle, and it's very busy time for auditors and alike to sort of work on these with summer holidays. And at the moment, we're very happy providing results in September when our year end is at the end of April. I don't think we'd be looking to deliver these in the middle of the summer when most people are away. So we could possibly do it a couple of weeks earlier, but as a business, we're happy sort of delivering them at the beginning of September. Andrew, with the largest number of new clients onboarded in 2024, how will you guarantee the retention rate and maximize value for these customers moving forward? I think that's by attaching services, as we mentioned earlier. They're not just reliant on us on hardware. And once they've attached services and we're managing these clocks for them in the cloud, this gives us a much higher retention rate. The only customer we have ever lost was previously was Ultimate, and that was through acquisition, and through services and the platform, our customers are very happy. David, fantastic results. We made 0.9 PBT in the H2 of 2024. That's 1.8 million in the full year for 2025 with additional revenue and cost growth. You mentioned a strong pipeline, which you suggest is more than cautiously optimistic outlook. What risks are feeding into that cautiously optimistic statement? I think it's more about the timing. So while we have a strong pipeline and we're onboarding these customers, and that's been very positive, sometimes we're not in control of their timing when they start placing orders and for delivery. And it could be a couple of months delayed, and that's why we're sort of cautious about the optimistic of the timing of the delay and sort of releasing that, but nothing more than that. Once we're sort of onboarded them, we're not completely in control of their timing on taking the clocks. And I think that is the end of our questions.
Absolutely, Mary-Claire, Paul, thank you very much indeed for being so generous of your time then, addressing all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so, and we'll publish all those responses out on the platform. But Mary-Claire, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Yes. As I said at the beginning, it's been an important year of strategic execution that's delivered positive results in every way. Looking ahead, I believe we have the right strategy, the right team, and disciplined orchestration. So I'm really confident we will continue to execute our plan with great success, energized by our customers and partners, and optimistic for our future, focused on many growth opportunities we have in our sights. Thank you.
Perfect. Mary-Claire, that's great. And thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of NEWMARK Security PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.